Hey everybody, this is Jose Blasco. We are about to start in 20 plus seconds. Quick sound check, if that's okay. A quick message on the chat box would do, just so I know that you hear me well, so we are ready to get started on time. So just a quick hello. That would be very appreciated. Thank you so much, guys. I'm gonna turn on the video stream as well. So I'll position myself in the bottom right corner. How are you, everyone? Good to see you all. And again, ready to get started right now. It's the time. We are now live, everybody. Wonderful. Hello, everybody. Official welcome to the session now. Welcome to the Futures Now session. We are ready to do some intraday trading using futures markets, isn't it? Today is November 30, 2020, last day of November. Meaning that we are about to start the last month of the year, and so many opportunities out there with that come together with the huge amount of uncertainty, which probably will create a lot of volatility, probably in both directions, up and down. So from an intraday trading point of view, certainly there are great opportunities to be taking advantage of. So that's the plan, and today we're going to be doing that together. Hopefully you guys are ready to interact with me. If you have questions, certainly I'm more than happy to receive your questions and I'll give you answers. If I have questions for you, I really appreciate your participation as well, so you get answers from me that will make the session more interactive. I imagine, I'm pretty sure actually, that some of you, probably most of you, are in practice mode, either trading seriously and real money, others more in early stages of your training and education for trading, maybe trading paper money or real money, smaller size. So I would expect a little bit of a mix in the sessions, both live as well as if you're watching this recorded. And again, that makes this crowd to really be enriching, because we learn a lot from basic questions as well as we learn a lot from very advanced questions. Okay, so no matter where you're at, make sure that you understand I'm here to help you guys, and feel free to phrase any question you may have. And if I know the answer, of course, I'll be more than happy to share. If not, I'll point at resources or anything else. Also, I expect, talking about the nature of the crowd, I expect that some of you may be traders who have taken our Survival to Mastery course. In that sense, probably we speak the very same language. Maybe you are an experienced trader, but you haven't taken our courses. If that's the case, it's okay. We can still support you 100%, no worries. But we do need to make sure, so make sure when you phrase your questions or when you listen to me, if there is any question, you phrase it, because there may be times where we use the same words, but we mean something different. And it may be because maybe your training has been based on other schools of thought, let's say technical analysis. It could be anything really. And by the way, there are a million ways on how to trade, and it's all fine as long as you have a proper methodology and you manage your emotions and you have a good risk management plan. As long as you work on the 3 pillars of trading, which are the 3 I just phrased, you could certainly be in a good position. You don't need to trade exactly like I do, while probably I would say the most helpful aspect of these sessions is when you get to understand how your instructors trade, because that could be something for you to either use by itself or use to enhance your current methodologies. A little bit of a longer introduction today, but since our community is growing and growing, and I can see some of you are new to the sessions, I just want to make sure we are on the same page and you understand the philosophy behind those sessions and how we can help you better. With all of this said, I'm just going to highlight the disclaimer. So you go ahead and take a look and read it carefully. This is important information, so please read it all. It's 2 paragraphs only, so it's not like I'm asking too much, but make sure you read it. It is not a boring legal text. It actually does say things that are useful. Okay, so make sure you read it very carefully. And while you're doing that, I'm going to take a look as well at the chat box. So I see you guys sharing those hellos and good mornings. Wonderful. Thank you for confirming sound is good and all is good, and very nice to see your names, guys. Some of you are in touch with us in a regular basis via emails with our support team and so on, sometimes with me as well. And I know you guys are very serious and very passionate about trading, which is something I love to see. So keep up the good work, everybody. Let's begin, isn't it? Let's go for it. So I'm just going to jump into TradeStation. Okay, and in order to save time, one of the things I love to do is to utilize AutoClimate. For the ones of you that you have seen my sessions before, AutoClimate could be presented in a graphic format when we load it on a chart, as well as AutoClimate could be presented on a grid format when we load it into radar screen. And I love to save time by utilizing AutoClimate on the radar screen, because basically I end up with these golden alerts where every time I see a golden alert, it's telling me there is a near sensible opportunity. Well, let's go load the chart and plan the trade. Notice that the opportunity is right now on the YM, for example, to pick one, which is the Dow Jones futures. Notice that they point at hopeful, right? Meaning that probabilities are less on your side, where the one on the top it says sensible, which means probability are more on your side. Okay. Also, a keyword is the word near. For the ones of you that have not seen this before, the word near means that potentially that market has retraced to a point where you may be near to an entry price, you may be near to a good entry to get into a trade. Where if you don't have the word near, putting on the side, it could be hopeful or sensible, and of course we prefer sensible, isn't it? Well, if the word near is not present, it probably means that price is far away from a valid entry, and therefore there is a lot of waiting time involved. And while you wait, not only it's a little bit of a waste of time, somehow from a point of view of efficiency, isn't it? The other problem about the waiting time is that while you're waiting, market conditions may change, and you were waiting to get short, and next thing you know, the market changed, and now it's time to go long. So again, I like not to waste my time, and also especially when we meet in the YouTube channel, we got 45 minutes in front of us, and certainly I do like to be efficient with the use of the time, and therefore near sensible is what you will see me use. A bit more of introduction, and again, I know some of you know what I'm about to say, but it's important for all of you to be with me. A little more about introduction is that we got 15-minute climates on the top, 60-minute climates in the middle, 240-minute climates in the bottom part. In other words, we got more markets below, less markets above, but we also have more liquid markets above and less liquid markets below. Now, if you're going to position yourself for longer term trades, and when I say longer term trades, is not correct, to be honest, because we are talking about intraday, but it could be intraday very short term, or it could be intraday longer term, which is what I meant to say. So if you're basing your trades on a 4-hour climate, it's okay for you to base those trades in markets that are a bit less liquid, because your trading zones are going to be wider. The distance between entry to stop is going to be further away. And then even if you were to get a bit of slippage, it's not significantly problematic. Okay, so that is fine. Now, if you are going to the extreme, basing your trades on lower time frames, in this case 15 minutes, you are more active as an intraday trader. And if you are doing that, then because it's lower time frames, the distance between entry to stops is going to be shorter, and therefore in that sense you may be exposed to a problematic situation if you get more slippage, because let's say your trading zone is 1 point, to pick a random number, and then you get a couple of ticks of slippage. So then your risk that was 1, you thought it was 1, but your net risk was 1.5, which is 50% extra risk, which is huge. So in other words, when you deal with very low time frames, we want to make sure the liquidity is better, and therefore I had to be pickier selecting those markets, and that's why my list on the top is shorter compared to the list below. And in the middle, of course, it's in between, right? It's not so short, it's not so long. So in the YouTube sessions, guys, I'm going to be focusing on the top most of the times, unless we do an exception, because those are more active trades, and since we only got 45 minutes, so I like to be active to demonstrate. While what I'm about to demonstrate is applicable to the 15-minute time frame, the same thing is also applicable to the 60, the 240, even other variation of time frames that you may prefer to use. But again, keep that in mind that most of my activity will be 15 minutes. So I have more opportunity to demonstrate, given the fact that I have 15 minutes of time, 45 minutes of time in front of me when we meet in the YouTube channel, okay? Cool. So with all of these comments made, okay, we have this flashing alert with crude oil, CL. So I'm just gonna go ahead and load CL15, which is my crude oil workspace. And by the way, guys, if you would like to have a copy of our workspaces, more than happy to share. Just go ahead and send an email to support@tradictive.com and request it, and we'll email it back to you. Not a problem. Okay. Now, as I am loading the workspace, you may notice those weird candles on the left. And the reason why we have those weird candles on the left is because the contract I'm currently using, the contract I currently got on my chart, it's already expired. Okay, so how do I know the current contract which is running right now with the greatest liquidity? There are many ways on how to do it, but one way I love to do one way on how I like to do it is to use barchart.com, which is a free website. So I can click on energies, crude oil, as I did, and now you come in here and notice how it's suggesting to use F21 as the expiration date. And I like to double check by looking at the volume and open interest values and make sure that F21 happens to be the greatest value, which definitely they are, because the ones below, as you can see, are kind of like half the size. Okay, so F21 is the right contract to be used. The last time we used crude oil in the YouTube channel, we were using Z20, but we're gonna have to change that to CLF21. And as we do that, we're gonna have nice charts with no weird candles, because now this is the liquid contract that is trading currently. Okay, let me take a look at the chat box. Yes, all is good. Luis, we can set up the same charts in TradingView. Yes, absolutely. Yeah, you could certainly set up the same charts on TradingView. TradingView does not have a red screen. Okay, but if I show you here, so here, for example, I got, let me turn it on, I have it off. So I got the UFOs here on the top for crude oil. Okay, so here you can see the UFOs. This is the 8-minute time frame to be precise. And here in the bottom part, I got the AutoClimate. So AutoClimate below, UFOs above. Okay, the look and feel, of course, is different because it's a different trading tool. It's a different software, isn't it? So the look and feel is different, but you will see that the identification of values is going to be exactly the same for both platforms. Okay, so the tools are available in both cases. Now, there is a big difference in one thing that applies to futures specifically, which is the fact that with TradeStation, not only I'm using minute charts, but I am also using share bars and tick bars, which are not related to time. And share bars as well as tick bars are not available on TradingView. Okay, of course, TradeStation is a more sophisticated platform. Of course, it also requires that you fund an account, and then you may not even trade it, and you can still use the platform, and there is no software fees. But you do need to go through the process of funding an account to have access to the platform. Where TradingView, you can have your basic plan, and it's completely free. So of course, there are certain limitations. Okay, so you have two choices: either use TradingView with time-based charts only, which, by the way, it's okay, it's fine, or you can use TradeStation, where apart from the time-based charts, you have share bars and tick bars, and you have the red screen. And then, of course, you have you have more tools in your tool belt, which, if you ask me, I prefer to do it this way. But it doesn't need to be this way. Especially some of you may be located in countries, like for example, in certain parts of Canada, just to pick a country, TradeStation would not be able to accept customers based on the financial regulation, and then you cannot have TradeStation. Is that making sense? So again, that's what it is, and then we need to adapt. It's just like when we load a chart on the market, sometimes it's time to trade, sometimes it's not. So this is the same thing. Some of you may have to use TradingView. Some of you may have to use TradeStation. Some of you may like to use both, and all of those combinations are, in the end, personal decisions. Cool. Okay. So we are looking at crude oil. Okay, and in the methodology we use, the first step would imply looking at the 15-minute time frame, as we said, and look at the climate, where the climate, as we can see, it's showing us a thick and red dot. That means the climate is confirmed. That means thick. And red means the climate is confirmed to the downside. Okay, and by the way, the climate will update in less than a minute, because we'll have updates every 15 minutes. And in less than 1 minute time, it will be 11:15 a.m. in New York, and therefore we're going to have an update. Okay, so we'll see next candle. I froze the screen, by the way. So next candle may not be red. Next dot may be blue, maybe red. We'll see. We'll see that in just a second. Actually, you know what? Since we only have a few seconds to wait, 30 seconds to be precise. Let's wait so you guys get to see the change real time, especially for the ones of you that are newer to the sessions, so you can follow more closely with what we are doing. Okay, so watch for this dot here. Okay, and look at the clock. It's 48, 49, 50. So we got 10 seconds to go. In 10 seconds, we're gonna have an update. Okay, and we're gonna get to see this dot to remain as red, or maybe change to blue, maybe go thin instead of thick, or maybe remain as thick. Okay, so look at that big change. Okay, big change. So basically, we are not gonna trade crude oil. Okay, but let me explain why. Okay, let me explain why. Notice that a minute ago, the climate was defined, confirmed. That's the right word to use. Confirm means thick dot. Well, notice how the new dot we got is thin. Okay, and thin, like it happened sometimes before. It means that the climate is not confirmed. So there is some directional component into the market data which is being processed by AutoClimate, but that market data is not suggesting that there is a statistical advantage on our side. And therefore, the AutoClimate, it's showing us that, giving us a thin dot instead of a thick dot. My rule when I see a thin dot is I don't trade. Okay, so I'm gonna switch crude oil and go for another market, and that's it. Some of you may be more aggressive than me. I may say, you know what, yeah, I'll trade, but I'll go with half of the size, or I'll trade, but then I'm going to set my targets closer. Again, it's all valid as long as you backtest your variations of your methodologies and you know what to expect. And of course, your methodology makes sense and gives you an edge, which you will know when you backtest if it gives you an edge or it doesn't. But again, in my case, while I'm aggressive in one hand, in the other hand, I don't like to waste my time. And in that sense, I would say I'm conservative. And when I see a climate that is not confirmed, I just pass, because there are other markets to trade. It's not like crude oil is the only market we can trade, isn't it? So no need to wait or force a trade. That's at least my philosophy, okay? So we are not going to take this trade with crude oil because the climate is now not confirmed. And when the climates are unconfirmed, then you don't have a statistical advantage on your side. Okay. Anil is also asking about what does MAE stands for, and this is moving average exponential. To be honest, in most platforms it shows as EMA, and I'm not sure why in TradesStation it shows as MAE, which is moving average exponential. I'm not sure why they tweak it this way, but it's the same thing. Okay, so it's a moving average, and you will see later as I find a good trade setup, you will see why we have it there and how I'm going to use it in case you have not seen the sessions yet. Okay, Joe, if I have 3 UFOs on the 2 minutes edge and reactive charts, all giving me a buy signal with AutoClimate, but each with different entry positions, which do I take? The closest, the furthest away from the entry. Okay, so actually, to be honest, this is very, very much related to the reason why we have an EMA, because the EMA is going to be our reference point, which is going to set a price, in this case 45.17, and that will be the price that you're going to use as a reference to either accept or discard the various UFOs that we will find in the different charts that we have on the screen. Okay. Now, if I said that too quick, it's okay. I'm gonna go back to the red screen looking for a trade setup, and as I look for a trade setup, I will explain it, and I will go back to you, Joe, to re-explain that. So what do we have? Gold is giving us a near sensible alert. Okay, so gold contract. So let me go ahead and open GC15. Same story, good practices. I always recommend very, very much to always double check your expiration dates, because it's very easy to get overconfident, and next thing you know, you trade the wrong contract, and then you get killed on slippage and you wonder why. So I'm back to bar charts looking for what is the right expiration date for my gold contract, which seems to be G21. But again, always a bit skeptical. The greatest values are here. Okay, so what's that? And in this case, it does coincide. Most of the cases it coincides, but not always. Okay, so G21, it's the one we're going to use for gold. So let me get onto my chart and do the same thing I did with crude oil earlier. GC G 21, so reloading the right symbol so we can plan on the trade. Helen, Jose, good morning. Since AutoClimate is using indicators, does this mean that it is delayed by the time frame used for it? By the time frame used for it. Well, AutoClimate is an indicator, right? So you got this right, and therefore, no matter which time frame you apply it to, depending on your plan, there will always be a lagging effect because AutoClimate is indeed processing past market data to first calculate statistics about the nature of the market that we trade, meaning when it goes up, how long it tends to continue going up, when it goes down, how long it tends to continue going down, as well as it's looking at price action to define how strong or weak the move is happening at the moment, and in that sense defining the market climate, meaning are you in a situation where you are more you will have a statistical advantage by being a buyer, or you will have a statistical advantage by being a seller. And the reason why the reading is going to produce some sort of a delay, okay, a little bit of a lagging effect, it's because we are processing past data with it. Okay, the reason why it's not going to be a problem is because number two, you have the three characteristics that AutoClimate is analyzing. Okay, and by the way, there are YouTube videos in our channel that talk about AutoClimate in the sharpening playlist, so you may want to watch that. But the three market characteristics that are being analyzed by AutoClimate are characteristics that tend to last. In other words, to identify what is a market condition, you need to process market data. What is the bad news? You will have a lagging reading or lagging conclusion. What is the good news? If the market data you analyze represents lasting characteristics of the market, so while you will know that after it happens, it's still okay for you to know it at that time because it will tend to last. Now, you are not going to hope it's going to last for X amount of time just because you want to. What we're going to do then is to compare what AutoClimate tells you with what the statistics suggest. And therefore, you will now have an understanding not only that you should be a buyer or a seller because you are relying on characteristics of the market that tend to last, but also looking at the statistics, you will know that they have been lasting for a reasonable amount of time instead of, let's say, for example, it's an uptrend and you are buying the peak because the uptrend has been running already for way too long. And while it could continue running, it's unlikely given the nature of the market from a statistical point of view. Okay. So again, we don't have a crystal ball, Ellen. So there are certain things that, of course, we will not know unless we see them happen. And if they happen, it means us stating this is happening, it's already kind of lagging because it's already happening, correct? So we're going to try to mitigate the problem of not having a crystal ball by relying on those lasting characteristics of the market together with comparing those readings with what statistics suggest the nature of this market is it's a likely thing to happen. I'm not sure I phrased that properly in proper English, but hopefully you got my point. Long one. Hopefully this makes sense, Helen. Let me know if this is not the case, and I'm happy to extend or rephrase what I explained. Okay. Anyway, so we are looking at gold. Okay, so what do we have with gold? Okay, so with gold we got that 15-minute time frame. We are looking at what is the AutoClimate. The AutoClimate is telling us is thick and blue, meaning the climate is confirmed, and if we want to trade gold at the moment that we speak, it's time to be a buyer. Okay, why? Because we are relying on those lasting characteristics of the market that suggest being a buyer gives us a statistical advantage. Now, is it too late to be a buyer? We miss the boat, and now if we jump in, we're chasing, okay? Or are we getting in, when yes, everything is pointing at this market is going up, but it's way too late for us to enter to the long side? Well, that's when the stats come into place, okay? And the stats we care about in this case are those three figures. But to be more precise, we care about the figure on the left, which represents up climates. Okay, so statistics suggest that in the case of up climates in this time frame for gold, the market movements to the upside tend to last 4 candles in a 15-minute time frame chart. So in other words, 1 hour. Okay, so if you catch this trade, you can be in a trade for 1 hour. More than 1 hour could happen, but it starts falling into the unlikely territory, right? It's kind of like, okay, so it's moving in the direction, but if you enter now, you are late to the party. Okay, so how late are we? Well, this is candle 3 out of what statistics suggest is 4, or a normal thing to happen would be 4. So in other words, if we manage to enter now, we can still enjoy the current candle plus one more. So that would be like a 20 plus minute trade. And certainly if you're an active trader, that could be good enough. Also, because sometimes, I mean, like here you can see a clear example. Okay, let me go back here. So like if I was to point at what the down climates are supposed to be. So statistics suggest that down climates will be 6 to 7 candles. Okay, and if you count out how many candles we got here on red color, is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So this is unlikely. This is not likely to happen. Okay, this is not likely to happen. What's likely to happen is 6 to 7, but 13 is not. But could it happen? Yes. So I'm very happy to enter a trade on candle number 3 out of 4. Why? Because if those 20 minutes time, or even 15 minutes, or even 10 minutes of time are enough for me to get to my safety target, now I have removed the risk of the trade. And now if the market was to expand and have a great propagation, which by the way, when this happens, you normally have a very punchy move. It doesn't happen too often, but when it happens, you do have that punchy move. So then, you would potentially get to a very far away target. If you didn't get to a far away target, at least in those 15, 20 minutes initial, you will still have time to get to your safety target and remove the risk of the trade, hopefully start trailing stop a little bit, and maybe you end up with a small profit. But you know what? If the small profit is high probability, let's take it. Ideally, you want greater profits and great probability. But sometimes the market will not give you that because the time at which we are loading the chart, what we are presented with is what we are presented with. I cannot go back in time and rewind the market, isn't it? Now, could you be more conservative than me and have a rule that say, you know what, I'm going to pass when I see this? Of course. You can have a rule that says, hey, if it's candle number 2 or more, I pass. You could do that. But then you would miss many trades. Okay, so in my mind, it's really not worth it. So I don't want to make it too complicated, and certainly simple works. Okay, so in other words, what do we have? So we have a climate which is defined. We have statistics that tell us that 3 out of 4 is still allowing us to take the trade because in 4 minutes of time, 3 minutes of time, we're gonna hit 11:30 in New York. That's gonna give us reading 4 out of 4, and therefore that candle 4 will conclude 15 minutes later. So we got 15 minutes in front of us to take a trade, and I'm happy to take a trade during those 15 minutes. So what am I gonna do now? Well, I'm gonna go ahead and look at my reference value. Okay, so Joe, listen carefully to this one. I'm gonna look at my reference value here, which is 1777.5. Okay, 1777.5. And now if let me go ahead and draw a line just to be visual, 777.5. So if I draw a line on this chart, this UFO is lining up with the EMA. Okay, if I draw a line on this chart, 1777.5, so that UFO is lining up with the EMA. By the way, the EMA, the M stands for moving. So notice how now it's 0.6, it was 0.7 a second ago. It's okay, we need to count on the moving aspect, okay? And then if I was to move my line here, again, 0.5 also coincides with that UFO. So, and by the way, and here on the bottom right, I also have the reactive timeframes, okay? Now, the reactive timeframes, okay, guys, for the ones of you that have not taken our Survival to Mastery course, you need to know that the time frame we got below, we call that the common time frame. The time frames that we got on the top, we call these the edge time frames. Okay, all of those on the top are the edge time frames. And the ones that were here below, we call them the reactive. Okay, so the reactive time frames, they are used for manual entries for more conservative traders that want to see more evidence of what they expect to see before they take a trade. Is that powerful? Yes. Is it gonna help you do better? Yes. Is it gonna have you miss many, many trades? Yes. That's the price to pay. you will be more accurate, but you will miss many trades because there will be times where price will touch and go, and you are still waiting for the reactive time frame to give you the go. And when the reactive time frame gives you the go, it may be too late, and you may not be able to take the trade. So the downside of using reactive time frames is that you may miss trades. The beauty of using reactive time frames is that you are going to be more accurate potentially, and that therefore it's adequate for more conservative traders. I told you I'm not conservative, so I'm not going to use it. And if that's okay, to not to make it too long, because today I am adding a lot of time with details, and hopefully this is helpful. But if I add too many details, I'm going to be confusing. So if that's okay, today I will not talk about reactive timeframes. I'll just ignore them, even though they're there. So I'll just focus on the edge timeframes on the top, and then another day we'll talk about the reactive timeframes. Is that okay? Okay. By the way, we just got 11:30. Okay, so we got an update. Our EMA has been updated. We are still in a valid climate for us to take the trade, but notice how the EMA now is 78.8. So what happens? Okay, well, 78.8 is right here. Okay, 78.8 is right there. 78.8 is right here. Okay, so which UFO should I use? Should I use the UFO on the left with a stop below 0.3? Should I use the UFO on the middle with a stop below 0.3, which is in this case is a coincidence, but is the same price? Or should I use the UFO on the right where the stop would go below 0.0? Okay, that's the question. Which one should I use? Well, while those UFOs are plotted in different charts, it's gold. It's the same market. So if I was to plot all those UFOs in one chart only, they would actually overlap each other. Okay, so what you need to do is you need to be looking at overlapping conditions. That's what you should be looking at. And here, if I was to add a second line, and I was to put my second line to where the bottom price of those three UFOs is, which is 0.0, okay? Notice that 0.0 is there in the white space. Notice that here in the middle, I don't think I did this right. Let me do new parallel one more time. So 0.0 is right here in the white space as well. And notice here, well, here is actually no need to do it, but just to be consistent, I'm going to do it too. So 0.0 happens to be the bottom part of the UFO. So if I was to place my stop one tick below, one tick below, one tick below, okay, I would be relying on unfilled orders that are located in the same price, because those UFOs are overlapping each other, and most importantly, those UFOs are lining up with my reference point for the trade. Okay, now why is it important to use the reference point for the trade? Because I want to add odds in my favor. We have a UFO here above, right? So you may say, wait a minute, what about I take the trade with the one above? Okay, could we see price come to this UFO and go? Certainly. It is on field orders, guys. It's on field orders. That may work. Okay, that may work. Even in this case, I'm just noticing that all those UFOs on the top also are overlapping each other, which is not always like that. Okay, but even if you only had one, price may come to this UFO, and given the up climate, price may go and you have this beautiful trade. So the question is, should I take the trade here or should I take the trade here? Well, it depends on your plan, but you need to think about odds. And if you think about odds, you would understand that the bottom UFO, the one that is lining up with the EMA, has more odds. Why the bottom UFO has more odds? Well, because while we have on-field orders right there and right here and right here, those on-field orders could be canceled. Is it likely? No. Could they be canceled? Yes. So what could the EMA do for us? Because of course, if the on-field orders get canceled, we're going to get stopped out. We're going to lose on the trade. Is that making sense? The reason for this trade to work in our favor is because the on-field orders kick in and the market pushes. If the on-field orders are canceled, there is no on-field orders kicking in. So if the on-field orders were to be canceled, then we will get stopped out. That's why we use a stop. Okay, if this was to be a sure thing, we would not use stops, correct? So now, why is that EMA trading at that value useful? Well, because notice how so many times price comes to the EMA and bounces, in this case to the downside because it was a down climate, okay? Or here, price comes to the EMA and then bounces to the upside, okay? And here it was a blue climate, right? So the EMA often acts as an additional source of unfilled orders that will be added to the market when price comes back to the EMA. Those are unfilled orders that have not been added yet, but potentially could be added on top of the unfilled orders that we have already identified thanks to Magic AutoUFOs. Correct? So think about it. We are talking about potentially more unfilled orders available, even if those unfilled orders were to be canceled. You may still catch a new pile of orders of unfilled orders kicking in that at least may give you a little bit of a bounce and hopefully help you reach your safety target and at least get rid of the risk of this trade. So again, long story short, there was a long explanation, but taking the trade with the upper UFO carries less probability and more risk, where taking the trade with the bottom UFO, which is lining up with the bottom EMA, carries less risk, but also has greater probability on your favor, because instead of one force in your favor, you have two forces in your favor, which are the unfilled orders that are currently available in the market already, plus unfilled orders that may be added as a consequence of computerized trading systems trading those exponential moving averages, which is a normal technique, and there are many more, by the way. But this is one very, very common technique that is certainly efficient. Okay? So, in other words, which UFO am I going to pick? The ones in the middle, and because they are overlapping, my stop will not go below 0.3. I will look for the worst case, which is 0.0, and my stop will go below 0.0. Okay, so that's going to be my plan. And by the way, it seems that, not only gold, it's not coming back to our entry point. Actually, a new UFO just formed right here. So meaning that there is a lot of massive pressure when it comes to buying. So with the 10 minutes we got left before the session is over, I'm not sure we're going to see gold come down all the way and then get the tech from here. Okay, I'm not sure that's going to happen. By the way, here we go, more UFOs on the right as well showing up. So you can see how the app is picking up this dynamically, isn't it? But by the way, you will be surprised many times, or if you have traded for long enough, you will not be surprised. You know what I'm about to say. But I'll use that term. You will be surprised sometimes on how fast the market may move. And when it looks like it's going to the moon and it's never going to come back, next thing you know, 2 minutes later, it's meeting your entry. So again, let's not be biased to what we think may happen or it looks like it's happening, because this is subjective. Let's apply our plan, which is to set a trade using those UFOs as a valid entry. Why? Because the climate suggests to be a buyer, and the EMA, which is enveloped by those three UFOs, qualifies as a valid entry point because of everything I explained, hopefully with enough detail. Yeah, KJ, the support email, it's support. Okay, support. Sorry for the caps. Support at TRADDICTIV.com. Okay, that's the email that you may want to use. You want to use to reach any sort of support you need, guys. Okay. Very cool. Everybody with me on the long explanation, give me some feedback, guys, because it's today I guess I'm inspired. Normally I'm just kind of like going for the trades, but today I'm kind of inspired with the words a bit more than normal, and I'm sharing a lot of thoughts, which hopefully are eye-opener and hopefully not confusing you. So let me know, guys, how is it going out there with everything I've been explaining so far. Now, so let's plan on the trade. Okay, so I'm going to use the chart on the right to do some typing. Okay, so what we want to do is we want to buy here. Okay, with a stop below here, in case we're wrong. Okay, so that would be the plan. Okay, buy here with a stop below there. Then we will take that distance, okay, and we project it above. And projected above, that's going to be what we call our safety target. And what are we going to do there? We're going to scale out half of the position. Why? Because if I buy here, let's say with two contracts, okay, so gold comes down, 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 and I buy two contracts. And of course, it goes down, I get stopped out, I lost. That's it. End of the story. Okay, that will happen. But what if it bounces? Well, if it bounces just a bit, which this is quite likely to happen, isn't it? The further away your target, the less likely you will reach your target. But that's a pretty near target, so it's quite likely. So what would it happen if I close half of the trade there? Well, if I close half of the trade, I have made that size of a profit with one contract. And now, if gold was to crash and stop me out, I'm going to lose that size with one contract. So in other words, I made +1 and I lost -1. So that's why we call it safety target, because if you hit the safety target, you are now in a risk-free trade. You cannot lose any longer. So I'm going to have a safety target there, and then of course, this is just to add protection to the trade, and also that way I can take multiple trades in parallel. So if I hit my safety target with gold, I'm going to move now and find another trade and execute in parallel, but only after I hit my safety target. So I know I have removed the risk of the trade on trade number 1. Now I can go for the other ones. Okay, and then of course I'm going to have to set my final target, which is going to be in a different location, which I need to find. Okay, so I need to find all those values and place my order. Joe, I'm gonna finish this trade if that's okay, and then I'm gonna read at your message there and give you your answer. Okay, so now let's start from top to bottom. Okay, I'm gonna look at the final target first, and for that I'm gonna turn on AutoUFOs on the 15-minute time frame. Wow, interesting. Oh, I think I did it wrong. I think I turned. Oh, okay, I turned off AutoClimate, so I'm like, no UFOs. How can I be? Oh, and I did it again. Wow, fat finger. AutoUFOs. Here we go. So what is the next red UFO? Okay, so this is gonna be our final target. Okay, because I'm using the 15-minute time frame here. So because it's the 15-minute time frame, so the value that we see here, which is gonna be 1795.5. Okay, 1795.5. That's gonna be my final target. So my final target, I'm just gonna write it here, is gonna be 1795.5. Okay, that's gonna be my final target, which is higher than the screen, but I'm just gonna leave my note here so we can read it. Okay, this is a pretty far away target, which is good and bad. Okay, because the further away your target, the less likely you will reach. At the same time, we have trade management rules, and we'll be trailing stop. We'll be doing a series of things, and so if we don't get there, at least we'll try to maximize the amount of profit to be made. We can talk about trade management in other sessions, given the fact that I got 3 minutes left to conclude this trade. Okay. Now entry, that one is easy. Okay, it's gonna be 1778.8. And the stop, we said it was going to be 1778, but we need it to be below. So it's going to be 1777.9. That's going to be the location for the stop. Okay. Now, if I do that, so that means that my safety target is going to be 1778, and that's going to be point. No, I'm not doing this right. Sorry, guys. 0.7. Here we go. So 1779.7. Okay, so I'm taking the distance from 78.8 to 77.9, and I'm adding the same distance above, and that, if I did the math correctly, is 79.7. That would be the safety target. So let me place the trade, and then I want so you see it, okay? And then I'm just gonna go ahead and give you an additional explanation and take a look at your questions as well. So that way, before we go, it's all answered. Okay, so I'm just placing the order with 2 contracts here, as you can see. So stop would be 77.9, 79.7 would be safety target, and then final target 95.5. It's a very far target for an intraday trade, but that's what we got. Okay, so 95.5. Here we go. Oh, not sure why, but Okay, 95, almost there. 95.5. Here we go. Okay, so here's my target. Okay, so again, if I was to delete the lines, I think it would be easier to understand. Okay, so my light blue line represents the entry with the stop below and the safety target same distance above. And then this one here on the top represents my final target. Okay. Now, bad news really is that, gold is very far away from my entry. And in 1 minute time, we're gonna have an update on the climate, and you will see. I'm gonna suggest to cancel the trade, and you will see why. But if instead of going up like it did, gold had continued going down, so we could have been filled, and now you will be in a trade where if you reach safety target, that's it, you're out of risk, and now it's all about waiting for those UFOs to form on the way up towards your target, and while that's happening, you just keep trailing stop, trailing stop, trailing stop, and following the trade until you get to your final target. Okay, so now so we just hit 11:45. Okay, and because it's 11:45, we just had an update on the climate, and the update that we got on the climate, okay, is now telling us this is candle number 5, where statistics suggest that these climates typically, okay, what's likely to happen is to have a duration of 4 candles, and this is now the candle number 5. So in other words, we are now exceeding what is a typical duration for a move up on gold in this time frame. So in other words, we are more likely going to see some change of a trend or a pose before the climate goes back to be blue. Okay, now could it continue to be blue for another 10 dots? Yes, of course. Is it likely? No. So because it's not likely, and it's not that I'm saying it, I'm just reading AutoClimate, okay? And AutoClimate processes stats, and computers do certain things better than humans, so I'm not gonna play smart. I'm just gonna respect stats. And because stats don't seem to be my favorite anymore, so this is a trade that I'm gonna cancel. And unfortunately today, so we did plan a trade, but we didn't take it because the climate changed to a point where there is no trade to be taken, because if we take it, it would be against the odds. So we are not going to take it. Okay, but still, hopefully the session today was useful for you to understand the process, as well as some insights that I have been sharing with you guys. Before we go, I do want to have another look at the chat box, because I know I was missing a question from Joe. There may be more questions. Guys, this will be your time to type, because as I answer the remaining questions, we'll call it a day. Okay, so make sure if you have any question, this is your time. And by the way, if you are about to go and you did enjoy the session in the YouTube channel, make sure you click on that thumbs up, which I normally tend to forget, but today I didn't forget to ask you about it. I'm getting better, actually. I ask you for it more often now than before, so you guys go ahead and give us a thumbs up. Joe, please verify, does the EMA have to be inside the UFO? If it's higher, do we just ignore the trade? So the answer is yes and no. And let me be concrete, because obviously that was abstract. Okay. So remember earlier when I talked about the meaning of the M, right? And I said M stands for moving, meaning that this value changes. And it changes when you got updates on the 15-minute time frame. So every 15 minutes you have a new recalculation and it changes, but also real time it changes. Look at that. It's just moving from 0.8 to 0.7. So why is it moving? Because if that market moves either up or down, so you will have those changes. Okay. By the way, notice that as we are reaching a situation on the climate that is probably a bit exhausted, notice how we are not the only ones in the world picking up that, and sell on field orders are entering the market. Okay. So again, does it mean it's going to be a complete reversal? No. But certainly not everybody wants to be a buyer anymore. You see why we don't want to take this trade. Okay. Anyway, so going back to Joe. So let's say, as we said, that this is going to be your UFO. Okay. Well, you may say, wait a minute. The entry value for that UFO is 78.8 or 78.9, right? But the current value of the EMA is 79.8. And you're going to be like, 79.8 is somewhere here in the middle of nowhere. I don't have any UFO that is enveloping the EMA. Well, you don't have any UFO now, okay? But what's going to happen if gold drops from 83 and falls and falls and falls and falls and comes to here. What's going to happen to this value? It's going to drop too. Now the question is it going to drop enough so it reaches 78.9 or below, or is not going to drop enough? Well, again, so there are times, especially when gold or the market you trade is close enough that you could easily anticipate if you're going to have an overlapping situation or not. There are times like now where it's so far away that you may be like, oh my God, it looks like, and I hate to say that because it's totally subjective. That's my point. So you understand how subjective it is. You may say it looks like it's going to hit the UFO, but I'm not sure. So what would you want to do in a situation like that, Joe? Because the answer is you do need the UFO to envelop the EMA. So you have the two forces working for you, the on-field orders already available in the market, plus on-field orders that may be added by the EMA. Okay, if the UFO is not enveloping the EMA, then you are only relying on the UFO, which is fine. It's not wrong. It's just less odds. Okay. So if you want more odds and you want the enveloping, and you don't know if it's going to envelop or not, so one thing you could do is, just move the line a bit higher, and you can go ahead and edit the line and set yourself an alert. Okay, enable an alert where you have a beep, you have a pop-up window always open on the screen. You can have TradesStation send you an email, whatever, and that way when gold comes and hit the line, okay, now you will be able to evaluate if this new value at that time it's close enough or not from that UFO, and then it's time to take the trade or not. Okay, if you don't know, you will need to do that. Okay, assuming you have a rule where you want your UFOs to envelop the EMA. Okay, if you are trading a different variation, fair enough. But of course, you will need to do your back test and know what you have in your hands. Okay, because that would be a methodology that you produced. So you need to go with it, backtest it, so you know what it does. Okay. Hopefully this makes sense, Joe. Andrew, how are you? Yeah, Andrew. Unfortunately, I don't have time to look at the Aussie, and also today it's a future session. But it's good to see you, Andrew. It's good to see you, my friend. Fermon, my pleasure. Tony. Wonderful. Thank you. Very kind of you, Tony. It's my pleasure. It's my pleasure. Yeah, let me take a quick look at the Aussie. But just keep in mind, right, when you look at the schedule, there are sessions that are specific for Forex, okay? So let me see. So we have 240, okay, and 21, okay? So let me disable that one. So we are looking at the setup 240 and 21. Okay, this is for the Aussie. Okay. Why is it? Okay. So, hey, I don't get any UFO in my case. I don't get any UFO in my case, and maybe Andrew, you use a different setting than mine. My settings for UFO is 61.8. So with that, I don't get any UFO on the 21-minute time frame, at least with my current data provider, which is for Forex. Oh yeah, with TradesStation. Okay, let me try FXCM. Yeah, it doesn't seem there is a UFO. Let me try Oanda. No, it doesn't seem that there's a UFO, at least not with my settings. Still calculating. Yeah, no UFOs. Yeah, so if you use a different setting, maybe it could be. I could see that different settings may provide a red UFO somewhere around that price value. Okay, and if that was to be the case, this value 73.70 something does line up with the EMA 73.76, and then you would have an entry. But again, that is assuming you're using different settings than mine. And again, if this is part of your plan, it's absolutely correct. But my plan is actually to use 61.8. So in my case, I would not have an entry on the Aussie US dollar, Andrew. Yeah, the thumbs ups on the YouTube channel Normally you would find them on the bottom part of the video, somewhere on the right, I believe. And if you're using the mobile phone or a mobile device such as a tablet, next to live chat, you have an X. So you will want to close the live chat. And the moment you close the live chat, you have the thumbs up, and then you can reopen the live chat. I think it's how you do it. Tradestation UFOs, Tony, use a little bit of a different color code, okay? So in this case, all the UFOs in that particular case, in that particular example, are full green. Let's call it full green. But it's not always like that. And you can see that here on the red, where here is a dark red and here is a light red. Okay, so the greens indeed are all green, but it just happens to be that this is what we have in the market now. There will be other times where you will have different green colors. Okay, let me see if I can show you this quickly. Maybe I have market data here to show that. I mean, you can see it on the red side clearly, isn't it? On the buy side, what if I go for a daily time frame or something like that, just to show you? Well, in this case, it's all, okay, Murphy's Law, I guess. It's all full green. But again, not always like that. So I'm just loading a 4-hour time frame. Hopefully, it will work. And if not, just switch to other markets and you will see there are actually two types of grains. This is actually explained on the user guide as well. So you will also see examples on the user guide. Okay, I'm just waiting for the PD to go away so I can show you. And guys, I have extended this session way too much. We are supposed to make it 45 minutes, isn't it? Just love these, my friends. So I just extended it. Let me load 2000 candles. Let me see if we get some multiple color grains, and that's it. My pleasure, Andrew. PD. Okay, while I'm waiting for the PD, guys, by the way, talking about earlier, I mentioned very quickly about the schedule. So you guys may want to go ahead and when you go to our website, so there is this button on the top, isn't it? Live Get Together. Okay. So when you get in here, okay, so you have access to the calendar. And when you scroll down, you can see here color coded. You get to see the different sessions that are available. Okay, so the ones with Forex are the ones with the brown color. Okay, and by the way, we well, actually, just in case you were not aware, there is a Black Friday sale on our website. It concludes today, by the way. If you haven't enrolled in the Forex course, Survival to Mastery, there is a 40% discount. Maybe I should have said that at the beginning of the session, given the fact that it's the last day today, for the ones of you that are interested. But anyway, so Andrew, and for anyone interested in Forex, okay, look at the brown sessions. There are many Forex sessions that we do with different instructors as well. And, you don't want to miss it. And same into December. That was November, but same into December. Here we go. Here's your December schedule. Okay. We also added sessions on the Wednesdays. Okay, so here we go. Here you can see the different greens. Okay, you see that, Tony? So you can see light green, dark green. So the functionality is there. It just happens to be that sometimes the market will not give you that. Okay, and if the market doesn't give you that, then the UFOs will represent what the market gives us. Anyway, everybody, you guys take care. It's been a real pleasure as always. Love it. Keep up the good work. Count on us. If you have any question, send an email to support. See you in the next one. Don't miss the other sessions, guys. We have, I remember we are about to hit the end of the year. And I remember a very important session that we had last year. I remember around Christmas time last year, where I remember we had this session where basically we were gathering a lot of information from you guys when it comes to what was it that you needed. And I committed, guys, in that session that we will work very hard to add more sessions to the schedule, to add other types of sessions such as trading psychology. The schedule now is very diverse. There is a lot of stuff. Okay, Head Start is trading psychology. Solid as a stock is stock trading options. Obviously, is options. FX is FX. Futures is futures. So you have all the assets there. You have everything, including trading psychology, guys. There are so many things right now. So make sure you use it. Of course, at your own pace. I don't expect you to attend all those sessions. It's way too much. use it at your own pace, but use it. And if you need support, just contact us, guys. I'm super happy to help you. You guys take care. See you soon. Bye bye. Nice that you found the thumbs up, Joe. Take care, everybody.